In this video, I want to go over why it's so important to be objective in as much as you can about trading. And to do that, I'm going to cover a current swing trade I have in the Aussie USD currency pair. Now, the most objective part of my trading is what to do after I enter the trade and getting into the trade. Finding the trade location does have a little bit of subjectivity to it. And I'm going to walk through that right now. Here's a 4-hour chart of the Aussie US dollar. The daily chart, which is right up here, is what I use to decide which way I'm going to trade in the market. Now, I don't trade through Thinkorswim. They have an excellent charting package. And for Fibonacci traders, it's really great because I can right-click and delete lines that I don't need, so it doesn't clutter the chart up so much. So I use an indicator, an oscillator, to determine A, trend, B, momentum. I prefer to trade on the side of momentum because trend and momentum are not the same thing, and they do diverge at times. So in this particular thing, I was looking at trading to the downside. So popping over to the 4-hour chart, I had some levels taken off, marked off here using Fibonacci, retracements, extensions, and alternate price projections. And you got a confluence of prices right up in this area right here of certain levels. Now, with Fibonacci, yes, you can get lines all over the map, but that's not how you trade Fibonacci. You don't just trade the lines. I look A for a confluence, B for a trigger is what I look for. I'm not a Elliott wave aficionado at all, but I do know enough to get by, I guess. So when I got into this move started going up here, one thing I noticed was these moves were not, they're overlapping. You can see we come up here, we come down here, we come back up here, come back into here, which is back into this range up here. These moves overlap. Generally, when you're looking at a trend, you're not looking at overlapping moves. Overlapping moves such as this generally mean you're facing a corrective move. So markets aren't just A, B, C corrections, the 3-point corrections that people like to trade. They also can go to E's, and that's what I marked off here. Whether this is right or wrong, I don't know. This is not a lesson in Elliott wave. This is what I do to put some context to what I'm looking at. But I don't trade just simply looking at the waves. So once price got up in this area here, I said, okay, well, this is potentially a 5-wave correction or an E correction, right? So I want to see when price gets right up into the area that was marked off earlier. Okay, this is not was not hindsight. This area was sitting here just waiting for price, and price comes up to the area. Actually, 95.46 was basically where price gets up into, and that's where a whole bunch of levels coincided. Confluence. So the second thing I did was, okay, once price came up in this area, now finding these levels, finding your swing points, there is a little bit of subjectivity to it, but you can also make that pretty rule-based. I use a little bit of subjectivity, looking at the swings. Not every swing makes a difference to me. So the next thing I want to see, okay, when price starts coming in this area, I want to see momentum start going back to the downside. And for that, I use the oscillator histogram. You see we're moving up, coinciding with this move, and then we start going sideways. And then I start seeing a lessening, as you can see, in the overall momentum. To me, that's a good trade. Now, how do I get into this trade? Well, I most of the times I don't sit and watch the market. That's not how I want to swing trade. So in order for this market to continue to the downside, it's going to have to take out a swing level. And you notice this level right here, this candle going into the peak of the E wave and where my Fibonacci levels were. So for me, it was a break of this level would indicate a move to the downside. Okay? That's what I was looking at. I could have put it below this level right here, but for me, if I'm going to be wrong, I want to be wrong early, not late. And as you see, price does crash right through my area, comes back up, retests, and then goes on its merry way. Stop is just above this level up here. So then, now what? Now I found a way to get into this trade. Okay, the objective way to get into the trade was once I see the momentum start going down and it breaks a swing level. To me, that's a good indication that we're going to go to the downside. So now what has to happen? Well, I have to find out how to get out of this trade. So what I do is this. In this particular trade, I'll move this chart over a little bit. Let me move this line so you can see it. There we go. This line's red, this one's black. This black line here is actually where part of the position was scaled out. And I'll show you the other chart through my broker where you can see that we're still in the trade. And all this is the 127% extension of this move to the downside. So once price hit that area, I had an order to get out of that trade. So my trade was scaled out. My stop was then brought to break even on the overall remaining part of the position. So I scaled out at 93.90, and then it was time to start managing the trade even further. Dropping down to the hourly chart, I want to find objective ways to also lock in profit, but I also don't want to do it too quickly. Right? You want to have some objective way to do it. I want to keep my emotions out of it. I don't want to look at my charts and my P&L and see how much I'm up and then decide on that. I want to make it as objective as possible. So what I was doing was this. When the price would make a swing up, I'd be on the lookout to be able to move my stop. Okay? And once the indicator, the oscillator, it doesn't matter which one you use. I use MACD. I can use stochastics. It doesn't really matter. Once it started crossing back down here and takes out this swing low, move my stop here. As you see, the market comes back down, rallies up. Now, this is a small rally. It didn't rally up far enough. Okay, I have a minimum amount of candles I want to see make a swing up before I decide to move my stop. But you can see that my indicator that makes things objective, okay, it didn't cross down anyhow, so it would not have been an area that I would be able to move my stop to. As you see, the indicator goes up, makes this swing up here, starts coming back down, indicator crosses down, and it takes out this swing level right here. And that allows me to take my stop and put it up here at 93.75. And you can see right here, we've come down to this area right here. We're getting a retracement up. We've got the indicator cross up. We would need a cross down in this indicator for me to lock in to this area right here, which would be roughly 93.30 from 93.75. But I can't do it yet. I can't do it yet because my rules don't allow that to happen. Now I just want to show you the current stop loss is 93.75 short in the Aussie US dollar, 189 pips up right now in profit. Okay, so I also want to show you on this chart here, this where the trade got triggered in right here in this area right here. Let me just mark that off here so you can see it. Right there was where the trade got taken in. This is where the portion was taken out of the market, and this is the current stop. And I will take as long as it takes, and I'll manage this trade until the market decides that it's going to take me out. That way, I don't put any bias on the market. I don't have an idea where the market's. I'm not forecasting a turning point. All I'm doing is I'm taking advantage of what the market's prepared to give. This is a 4-hour chart we're looking at, and you can see this candle right here for people like looking at candles. This is a nice candle pointing towards the downside. We had a little bit of a rally up, and now the market's trying to go back down again on a 4-hour chart. But this doesn't matter to me. What matters to me is on the hourly chart, will I get the ability to manage my trade? So that's what I wanted to cover in this video. Try to keep things as objective as you can, and good trading.